Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right, guys. Good morning. Welcome back. Another live stream kicking off here as we get into unemployment claims. But not just that, we had news overnight. I mean, we got stuff to talk about. We'll be taking a look at all of it. We'll be taking a look at the UK's decision on interest rates. We'll be talking about the jobs data that comes out here in just, about 9 minutes to go. And yeah, should be good. Hope everyone's doing well. As you get started here with us, do us a big favor. Hit the thumbs up button on the stream. It does just to help out what we're trying to do here. We are trying to, create a live stream here that goes beyond just, what you usually find on YouTube. We've got a team of people who make this show possible. We bring on guests from all around the world. And we try and keep it all free. So, the content is free. We do sell some products. That is how we, kind of make all this stuff free, as we sell software tools to the industry and things like that. Yeah, we're getting close here to the news. So let me go ahead and start getting into some charts with you guys. As I said, if you would do me just a big favor as we kick off the stream, hit the thumbs up button and let's get into it. All right, so the dollar index is bouncing, it seems like, off of this 105.2 level. Which I mentioned was a very strong possibility for the dollar. You had this big break through these highs with some long wicks on the top. So it looked like we were going to come back, retest. We did retest, and the bulls gave us an answer. The bulls on the dollar at least trying to push up here. Why might that be? Anybody have any guesses why that would happen at 3:30 in the morning? And why there was some follow through here this morning right around 7 a.m. Well, at 7 a.m., we had some interesting news. Let me pull it up for you. We had the overnight, we had the Swiss National Bank, their rate decision. They cut rates. Not good for my position, by the way. Dollar Swiss, I mean, still fine. I closed out for profits on USD CHF, but my stop loss did get hit, my trailing stop. So I made profit on this position, but I gave back a pretty big chunk of those gains. So I got to admit, I did not expect the Swiss National Bank to cut rates. They surprised with another rate cut. And you know what loves that? You know what loves the smell of rate cuts in the morning? Gold loves that. Gold is up here this morning, 0.5%. With some follow through here from the other side of things. We had the Bank of England came out perfectly as expected. They did not cut rates, and they voted as exactly as people expected them to in terms of future rate cuts. They're still expected to cut rates. But remember, guys, I talk about this often. Gold is not just based on the US dollar. So you might say today, Nick, there's nothing that makes sense in this market. The dollar index is up, and at the same time, gold is up. This market's stupid. It's manipulated. It's not real. In the most respectful way, no, you just don't understand how it works. That is the answer. Okay, if that was you, if I just called you out, if I just flamed you, I apologize. It was meant to be. Wouldn't you rather some goofy guy on YouTube flame you rather than you lose a bunch of money in the markets? I feel like that's a win-win for both of us. Listen, the dollar index and gold can move up and can both move down at the same time. But you have to know the intricacies of this market in order to understand why that could happen. Why is the dollar up this morning? It's advanced compared to most fundamentals. It is kind of a more advanced topic. Well, the dollar is priced based on what its peers are doing. What happened overnight? Overnight, we got a rate cut from the Swiss National Bank, a surprise rate cut. And the Bank of England still looks like they're going to cut rates. The ECB's already cut rates. The Bank of Canada has already cut rates. Do you see where I'm going with this? Rate cuts are becoming a bit of a secular theme here. And the US is still hesitant on cutting rates. Remember, rate cuts equal weaker for the currency because, again, it's loosening monetary policy, which means more money gets printed, more stuff goes into printing currency. And when more currency exists, it devalues the existing currency in rotation, right? My point with that is over the last few hours, some of our European counterparties here cutting rates and looking like they're going to continue to be more dovish. That makes the dollar look relatively strong. But at the same time, guys, what does that do to gold? All rate cuts are good for gold. All rate cuts are good for gold, not just the Fed rate cuts or not. If that was helpful to you, I know that can be a very confusing thing. I get that comment all the time. Nick, the dollar's up and gold up. This doesn't make sense. Market manipulation. The market makers are stealing our money and it's not fair. And no. It's just fundamentals. And you got to understand the full context to really see why this does fully make sense. Does that make sense? Do me a quick favor, guys. If that was helpful to you, smash the thumbs up button. Number one, would appreciate that greatly here this morning. But if you could also at the same time, let me know by typing yes in the chat. Again, fundamentals are scary, but not on this stream, because on this stream, we break them down. We've got 3 minutes to go here, and we're going to be taking a look at the unemployment claims data. We also have the Philly Fed Manufacturing Index. Things could be volatile this morning, so please stay safe. They've already been volatile. If you're a currency trader, you watched overnight, things got a little heated. And now, what's going to happen with jobs data? That's the question. I've watched this channel for a while. Over time, this concept has sunk finally. That's awesome to hear, Lee. It was, man, I remember my first times understanding, like, how can the dollar go up when gold goes up? Just explain that to me. And it's a confusing one. That's an advanced topic for fundamentals. But once you get it, it's like, oh, gold is not just looking at the dollar. Gold is looking at all the currencies. Gold is a bet against fiat, right? US or abroad. The US has the most pull on gold, so it is usually the case that they move inversely to one another, but not always, and they don't have to. So understanding that topic is very, very important to being a gold trader or a currency trader. All right, speaking of gold, seems like we're holding support for now. We got claims in just a few minutes. We'll see how that plays out to see if that does cause further push or if we come back and retest these levels. I'm still long gold. I've got my position open for the last, man, it feels like a week and a half, 2 weeks. So it's been a minute. Also, if Chandler, if you wouldn't mind, I think we need to put the Twitter comment below the Twitter. I'm not sure if James did that or not. If you could message him or just put it there yourself. But we've got some people watching on Twitter. We got people watching on YouTube. Wherever you are, thank you for supporting. Thank you for watching the show here this morning. We are going to be covering the news. We got 1 minute to go. Claims data. Let me just invite you to stick around after the potential spike that we get this morning. The reason I say that is because a lot of times, we see the viewers pop up right into the news and then they just go right away because a lot of people just want to watch the spikes. But let me tell you, if you're trying to be a fundamentalist, the real fun is after the spike, not the spike itself. Spike is, it's a blip of excitement, but it's all about whether or not this changes the fundamental story. I'm going to do my best as the captain of this ship. Going to try to do my best to explain it as best I can. Guys, we got 30 seconds before the claims and Fed Philly come out. We've got the Philly Fed, SPX here, US 30, NASDAQ, the dollar's here, euros here, pounds here, gold is here, and oil is on the bottom right. So a Coming in here, breaking news, guys. 15 seconds to go. All right. Let's see what we get here. Claims data should be coming out any moment. All right. And claims data seems to have just dropped. Let's see what we've got here. Remember, we've got a couple different reports here this morning. Philly Fed Manufacturing Index claims came in still kind of high. Higher than just a tad higher than forecast at 238,000 unemployment claims. This is, however, lower than the previous one, but still somewhat elevated from where it was months ago. Building permits came in low. Philly Fed Manufacturing Index came in low. Okay. And how is the market reacting to this? You've got S&P not making too much of a move. Gold on the 1 hour chart did see a little bit more of a push to the upside. The dollar index came down slightly. The pound, the euro also bouncing off of that as well. Again, gold trading at 23.42, the time of us watching it here. Got 525 people watching the stream between the different platforms that we're streaming on. Thank you guys for hanging out with me. Let's break this down as best as we can. So if we go back to the data for just a moment, what is this telling us? Well, claims data is people filing for unemployment, right? Even if you're new to fundamentals, that's a pretty obvious one. A lot of people filing for unemployment, not great for an economy, right? People are filing for unemployment. That's not good. 238,000 were reported. And in terms of, let's see, was there anything on the revisions that's worth mentioning? No, not really. Okay, so 238,000 people filing for unemployment compared to the forecast of 235,000. So again, numbers came out about in line with expectations in terms of unemployment claims. So nothing too shocking on that side of things. However, what's the trend been recently? We've talked about this recently a lot. So let's see if you've been paying attention. Unemployment claims in the US have been trending up. And so today, again, we got a number that is going to come in on this. Once this data chart updates, it's going to look like this. Okay. We still, long story short, are still seeing what I would say is a trend of increasing unemployment claims. So what does that tell you? Well, rising unemployment claims could suggest that the overall unemployment rate in the US could continue to trend higher. And if unemployment rate in the US continues to trend higher, I'm talking about the percentage here, we've hit 4%. If we continue to trend in that direction, it's still very historically low. Unemployment is still very, very historically low. In fact, can we go back 5 years on the EDGEFINDER? We can. Absolutely, we can. It's the EDGEFINDER after all. Low unemployment, pre-pandemic, shot up and has come back down. But look at this over the longer term, guys. We're talking about unemployment that may not look like it's very high, but it is moving in a positive direction. And this certainly seems to move with a lot of momentum, right? When this thing is, falling, it typically keeps falling. And when it rises, it typically keeps rising. So we may have, and this is very early to try and call this, but with all of this interest rate hikes and high levels of inflation, we may be starting to see the bottoming out of the unemployment rate in the US. What that means is that we may be kind of trending up on unemployment. And if you get a sudden rise in unemployment, what does that do? Well, that would suggest that perhaps a recession, or at the very least, a slowdown in business activity in the US could occur. Now, what does that mean for gold traders? I know a lot of you guys trade gold. A lot of you trade the dollar. A lot of you trade options and indices. You trade a little bit of everything. Well, unemployment data coming in light continues to feed into the bullish perspective that I have on gold on our top setups algorithm. This is an algorithm. It's taking a look at all the economic data, and it's saying, hey, you know what? Data coming in, rising unemployment should be considered bullish for gold. Why gold? Because gold, remember, is a very soft hedge to that. It's a way that market participants try and offset their exposure to a particular thing, like the economy slowing down. That being said, let's have a look at the aftermath. The NASDAQ is just slightly down here off of that news. Same with the Dow and the S&P. The dollar dropped and is now kind of in the middle of that range. Same thing with the pound. Saw a little bit of a blip up, came back down. Euro, same thing. And gold, same thing. Shot up, pulled back. Now it's trading back at 23.40, about where it was pre-news. So is that a fair response? Well, I think so, because unemployment claims they weren't shockingly different than what was expected. That being said, unemployment claims coming in at these levels still keeps me in the bullish camp for gold. So that's kind of where I'm at. I'm continuing to stay long gold. That is my current biggest position, as I've talked about a lot on the show. We broke out on the hourly chart of this range that we were in yesterday. We actually even retested this overnight with all the volatility. And again, when you show me that we've had claims data coming in, continuing to show some slowdown in the labor world, you also have at the same time the Swiss National Bank surprise rate cuts. Bank of England still expected to cut rates. You've got banks around the world starting to cut rates. The story for gold for me is it's good for now, right? Until something changes or we break support, gold is still just the trade for me. Now, I have to say, I'm not going all in on gold. I'm not leveraging the crap out of my account to go long gold. I'm just telling you that right now, conditions for me continue to look bullish for gold. And gold has been one of my best, the best things that I've traded this year. I've been very, very long biased on gold for most of this year. I've taken losses in the recent kind of consolidation because, again, it looked so good. I traded this whole move pretty much to the upside. Then we went sideways, and I've caught a couple, false starts, losses in the meantime. But it looks like we might be bottoming out around the 2,300 level. So to me, I've had a lot of people. I did a video dedicated to gold yesterday because I've had so many people asking about this chart. Here you've got gold. Is this a head and shoulders? And this is what, a lot of the bearish people out there are pointing out. They're like, this is a head and shoulders, Nick. It's going to drop off a cliff and it's going to trend lower. But even the most, basic textbooks on head and shoulders patterns would suggest that a head and shoulders occurs when it breaks the neckline. Like when you get a solid breakout of this level, then yeah, maybe that's bearish. But to me, from a technical perspective, we're just consolidating. We're just trading sideways in what has been a very bullish year. So if you want to bet that gold is going down, if that's your base case, here's what you probably want to see. If you want to see gold go down, if you're a gold bear, fundamentally, technically simple. Technically, you just want to see a break of 2,300. That would be my perspective on that, keeping it really straightforward. But fundamentally, what you would want to see is inflation come in really hot, labor data come in really strong, PMIs really strong. You'd want to see a really strong economy come in for the US and other countries so that the prospect of rate cuts gets thrown out the window. If rate cuts get thrown out the window, gold is going back to 2,000. Do I think that's going to happen? No, that's why I'm long. I think rate cuts are coming. We've seen, again, we can see it in the labor data. The labor data is showing us, it's showing signs of slowing down. Our peers, I'm saying our as in us Americans, our peers in Europe and in Canada, our neighbors, are cutting rates. The US will probably follow suit, right? So rate cuts, remember, are bullish for gold. What about stocks? Let's take a look at the S&P 500 here. S&P 500 is just a rocket ship these days. I make this reference every single day just to remind people that although it is very strong right now, it doesn't have to be forever. I am still bullish on the stock market as well because I think that, you may get, there's this unknown for me. There's a question mark. I don't know if this slowdown in economic data from the labor market side of things. I don't know if it keeps trending down beyond, like, let's say right now the market is here, right? This is labor data. Okay. Well, let's say economy. Okay. The economy is showing signs. We are right at the red line. Okay. So we're like starting to see this little come down. Why is this good for stocks and for a lot of markets? Well, it's because as we trend back towards the green line, green is healthy growth, but we can get this inflation problem under control. Remember, a really strong economy produces a lot of inflation, right? If everybody is out spending money, buying houses, paying for automobiles and taking out loans, starting businesses, inflation occurs because prices get bid up. But if the economy is starting to show some signs of slowing, hey, we can get inflation under control and things can kind of bottom out, and things then can do what? Things can then proceed as normal. But I don't know if the breaking point is coming where we see this inflection where the labor data and the economic reads start to cool down. But do they keep cooling down, incredibly bullish for gold, or do they heat back up, bearish for gold? I don't know. In this case, stocks look really good. In this case, gold looks really good. So for me, I like to trade both of them. I'm watching the S&P, but I don't want to chase it. So for me, I'd be interested in a possible pullback on the daily chart, but just staying kind of watching it currently. As I mentioned earlier, I am currently long gold. I also just got trailed out for profit on my USD CHF short that was shared inside of the VIP room. So I went long gold. I've been sharing updates on this. I've added to my position size recently on gold. I've been breaking this down. This is one of the most traded things that most actively traded things. I trade a lot of gold, trade a lot of indices, oil, doing a little bit of FX as well. I trade a pretty wide basket just because I am, a fundamentalist, and fundamentals are not, they're not loyal to one market. They trade, if you're using fundamentals, you can really trade a pretty wide range of different things. Recently, however, I've been trading a ton of gold. So if you are not in the VIP room, by the way, just a little bit of heads up, our VIP sale is ending soon. Currently, you can get access to all of the trade notifications: gold, FX, options, stocks, indices. We trade all of it. Frank, myself, and Ivan are sharing updates inside of the group. If you'd like to join, it is currently 50% off to join our VIP membership group. This is ending soon. We're going to drop the link here in the chat. If you have not already taken advantage of our 50% off discount right now, we got something special for you. While you're watching here live, we're going to knock down the discount even further to 55% off. This is the lowest price of our memberships all year long. And if you've ever thought about getting a membership with us, just ask a few questions, send a direct message. You can speak to a real person on my team who can help you get set up with a membership. We have a couple moderators who are standing by to set up people with that discount. If you are looking to get access to this group, let me show you something. These are real trades, real accounts, no nonsense, no nothing. In fact, I will show you right now my positions. When you guys sign up for our service, what I want you to understand is I'm putting real money on all of my trades. No nonsense. This is my regulated US trading platform, Webull. I am currently long gold. I'm long TLT. I have some stock market longs that I've been talking about. These are my current active positions. If you're not in the VIP room, let me tell you, when I show you this stuff, I show you my personal results, good or bad, whether things are going well or bad. I show my account, because I want you to understand that if you're going to pay for our service, you're not throwing money away at somebody who you don't know is profitable. I show you this stuff because I've been doing it for a long time. It is something that we specialize in. We help a lot of traders reach the finish line in terms of getting funded and, learning the skills. And, by getting into a trade room like ours, you can rest assured that you're watching people who actually trade. So if you would like to join that, again, we dropped the link. The reason I'm pushing for it is because that is ending soon. It is currently 55% off to get access to the trade alerts, as well as to our chat rooms and coaching webinars and so much more. So come join us if you haven't already. Okay, so yields jumping a little bit here this morning. Why is that? Well, it's because, again, the interest rate differential, this dollar move higher, is off the idea that, well, other central banks are cutting. Another one fell today, right? SNB, another rate cut came in. The U.S. Has not cut rates. Look, this is right when the Swiss National Bank cut their rates. When the Swiss National Bank cut their rates, the US dollar went up because, again, with a strengthening, with a weakening Swiss franc, that's going to make the dollar look attractive. Now, you might be saying, well, Nick, weren't you literally short USD CHF? And my answer would be yes, I was. That doesn't mean I didn't make money, though, because I did get short before this, but I didn't expect, like many people, I did not expect the Swiss National Bank to actually cut rates. They surprised markets with a rate cut. And this is actually the second time they've done that this year. They've cut rates twice. So that being said, USD CHF broke back above my stop loss, which was trailed into profit, has been closed. So I'm out of there for now. Okay, let me just check the stream schedule here really quick, guys. I gotta keep tabs on this just to make sure I'm looking good. Okay, so we got Miko coming in and Marco coming in just a moment, guys. So let's go ahead and roll a quick break, and then we're going to be taking a look at some charts with these guys. Stay tuned. We'll be right back with Miko and Marco just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, we are back with Miko and Marco. The trio is back together. What's going on, guys?
Hello. What's up? Hello.
It's good to see you both back on the show again. Kind of an interesting day in the currency world. We had some, we've been talking about on the fundamental side, all this rate cut drama and stuff like that. Dollar saw a little bit of strength, and I think Miko, you and I were talking about the dollar index at 105.2. Nice little bounce coming in. I'm curious what your thoughts are on this dollar bounce today.
Yeah, it's looking promising. I've been pretty bullish on dollar, so I'm only looking at opportunities that favor that. And it does look like we're bouncing off this level here. I've been looking at Euro USD to short, but it didn't quite give me the entry this morning, unfortunately. And it's kind of rolled over a little bit without me. So I'm kind of hoping we have another move higher to retest some resistance here to find that entry. But yeah, that's the plan I'm looking to take advantage of. I'm looking for more downside for Euro USD. Dollar, I think there's a good chance we do push all the way back up to the highs here around 106.400. So that's kind of the bias I have for the time being. As long as we keep up these higher highs and higher lows, I'll be looking at opportunities that favor dollar strength. So I'm keeping an eye on pound USD. It looks like we might be seeing a break to the downside this morning or afternoon, depending where you are. It looks like we might be seeing a break to the downside, which is what we discussed as well yesterday. So hopefully that can continue, and then I'll be looking for the retest on the flip side. But yeah, looking good. Euro, not too sure, might miss that opportunity. Hopefully it does come up, but I do have my eyes on pound USD.
Yeah, I think they're starting to move a little bit nicer here since we've last talked. The dollar is again strengthening here this morning, moving with some decisive price action, I would say, at least on like the 15-minute chart. Right here, when the Swiss National Bank cut their rates, surprisingly, the dollar took that as a signal to basically say, well, hey, if other banks are cutting their rates, but we're not cutting ours, it suddenly makes the dollar look relatively pretty attractive. Same question to you, Marco. If you're looking at the dollar today, whether it be the dollar index or individual currency pairs, whichever you'd like to look at, just curious your thoughts on this pickup in volatility on the US dollar.
Yeah, so for the DXY, seeing some bullish pressure on this 1 hour chart. But again, for me, this is mostly gonna be flat. Let me just run through the time frames. Yeah, on the daily, I can see what you're talking about. As far as the currencies that I'm trading go, again, I like this range. So that's a good sign for me to take maybe some range bound entries for, let's say, the euro and the US dollar. So for me, I'm looking at what will happen in the extremes of this range on EU on this 1 hour chart. And if we can push into the lower liquidity, reject nicely, I'll definitely look for some buy setups targeting the opposite side of the range. So that is a play for EU. Same thing to the upside. So if we push into the upper liquidity, reject, I think we're going to target these lower areas. That is definitely on the watch list. And then another pair I have on the watch list is the Aussie and the Japanese yen. So this one has been creating a very high probability pattern, which is an ascending channel. So I do expect this price to drop. When? Not sure, but still looking for that signature. If it does happen, I'll definitely look for some nice sell setups. So that is the other pair that's on my watch list for today, because it's really forming a nice, clean ascending structure. Aussie US dollar is a bit flat, waiting for momentum in this area, so I'm just leaving that one alone. Pound US dollar is also pretty flat in this general area on this 1 hour chart. So yeah, sticking to EU and AJ for today.
Okay, fair enough. So that's quick through. And I just want to mention to everybody who's watching, when it comes to both Miko, Marco, and myself, we all have similarities and differences that we look to trade. So I thought that was interesting. You broke down euro dollar with the possibility of a range bound setup or of a kind of back and forth break. If it breaks the high, that liquidity grab potential idea, and then back into the consolidation zone. So lots to think about there with all of this recent move. I also wanted to take a look at the metals. So Miko, I'm not in silver, but this chart is so beautiful, and I think I have I think I want to ask it on a date. That's how much I love this chart. Okay, this chart looks so good, and I just want this to follow through for the bulls. Of course, I'm also bullish on gold, and I have a position, but I'm curious on this silver chart what your thoughts are with this bounce we're starting to see. Does this have room to keep going?
Yeah, I'm liking it. I woke up this morning and price was breaking high. So for me, that's kind of what I wanted to see, because we were moving a little bit sideways, but we were still holding that support, as we mentioned yesterday. And that long-term trend line is still intact, and looks like price is kind of bouncing from that area. So I personally do think silver has room all the way back to its swing high, which is roughly around 32.26, I'm going to call it. So that's kind of where I'm looking to trade price towards. And now that we've kind of broken out of this consolidation here, to me, that's kind of a sign that silver has kind of picked its direction, if you will, in terms of, okay, I'm moving sideways. I could break high, I could break lower. Now with this breakout, it's kind of telling me, okay, I'm most likely going to keep pushing higher. So I'm personally looking for pullbacks now on silver. I like this area here. Should we come back and retest it, I would definitely be looking for some entry opportunities. And the idea of trade is to swing it back to that high. So I'm really liking silver. I think there is more room to the upside. Gold, I still do have a very bullish bias on that one, but silver looks a lot cleaner to me.
Yeah, fair enough. Fair enough. Well, I think, it is making a good initial push off of that range that we've talked about. I've had this chart drawn up for, I feel like 2 weeks, even just watching this level. And although I'm not in silver, I am in gold. So I'm kind of wanting to see the metals continue higher. I broke this down earlier. I will not repeat the whole sequence. I know that a lot of traders can be very confused by why the dollar and gold and silver can all be up at the same time on the same day. Without going too far into it, please understand that the dollar is all about the dollar versus other currencies, and gold is pretty much every currency. So there is a possibility where the dollar is outperforming other currencies, but gold just looks good against all currencies. that has that possibility to occur. And I just wanted to clarify that because I know sometimes in the audience that can be a little confusing to people who are watching the metals specifically. Same question to you, Marco. With gold or silver, I'm just curious your thoughts. I know you've been talking about gold a little bit here recently, looking at some strategies or doing some back testing on this. Just curious on gold here this morning. We do see an attempt, it looks like, to potentially break out of this 2335 level, which has been resistance for the last few days. I'm curious what your thoughts are on gold.
Yeah, sure. Let me take a look. So for gold, on this 1 hour chart, it's going to be pretty flat for me personally. So I'm looking at big legs of momentum, which I don't see here. So I'm going to be looking for something like this in my backtesting, like this big drop or a big bullish up move. 4 hour is looking pretty flat as well. And the daily is, I believe, going to look pretty similar. Now, what I can spot is a consolidation above this uptrend. So I think we're going to bounce in this area for a little bit. But again, this may continue with the overall momentum that we saw before. So I would not be surprised if this happens after we consolidate a bit more in this area. So how come you didn't execute a trade on silver?
It's because I already had one on gold. I have been in gold for like 2 weeks almost. It's was going sideways for some time. Finally seems like it's starting to break higher. But I at the same time love the silver chart. Both look just very clean to me. Silver's chart, I will say, looks better for me. But as you guys know, I'm a fundamentals junkie, and I really like the story for gold right now. So I chose gold, but fully admit that the chart on silver looks nicer. So, but yeah, definitely both look good in my opinion. I think we have room to the upside on that. And
so you're seeing a lot of correlation between the two?
There is a very strong one. Usually they move in the same direction. Most of the time they do move similarly. Silver is the one thing about silver is it usually will, really outperform gold if there's like a really bullish metals market cycle, or in some cases when you get like a really like kind of risk on sentiment in the world, because silver gets used for a lot of industrial stuff, so like airplanes and computer chips and everything like that. Sometimes silver can come into very high demand, and there's that kind of side to the story as well. So there's some differing factors, so they don't always move at the same rate, but generally the direction is the same. So something to think about there for sure.
So silver is like an altcoin and gold is Bitcoin.
Yeah, exactly. It is. Exactly. It they both would go up if there's a big crypto world for altcoins and Bitcoin, but of course altcoins will move faster up or down usually. Silver is the same. So yeah. Anyways, I also wanted to ask you guys a little bit about the indices. The stock market, the NASDAQ, they continue to push higher. I wanted to ask Miko about this. Both of you guys I know are not big index traders, but of course for the people in the audience who are watching the Dow or the NASDAQ, I'm curious what you're seeing in terms of technical charting. At what point is a pullback worth looking at? Is this level here, or would you wait for something bigger? What do you think, Miko?
Yeah, so S&P, NAS really pushing higher. I've been looking at, well, not me personally, but people ask it on my channel where I'd be looking for pullbacks if I was trading the indices. I've been talking about retesting of these ranges because every time we kind of consolidate for a few days, market has a really nice healthy breakout. So essentially looking for a retest of that would make a lot of sense for some entries to take price higher than again over here, but we never saw a retest. So for me, this is still a really healthy area should we see a pullback to this area. Of course, really depends how price gets, then how we react, whether it's still a good opportunity. But if we can see nice corrective pullbacks and rejection around here, maybe some candlestick patterns, that could be a nice signal that price is likely to head higher. Because we are very bullish on the higher time frames, there is that possibility we could go for a really deeper pullback, sort of like what we did here. There is that possibility that price might see a lot more downside and not retest there. again, you won't know until it happens really. So my kind of thought process would be, I've got a nice area here on the 4H. If price pullback there looks good, I'll look to take the position, expecting momentum to continue. There's a lot of momentum in the market right now, so I'll be anticipating a high low and a push to the upside. If it does fail, it fails, and we end up taking out this area and pushing deeper, then we will see that bigger pullback, and then we can tackle that when it happens. But for now, there's just so much momentum. Price is just flying. Same thing with NAS as well. I'll just be looking at these areas here. Brief pause in the market, big breakout. If we do get there, I think there's a good chance we do see another higher low, and I'll be looking for another higher high as well.
I like it. Yeah, and I think it's worth mentioning too what you talked about, like this zone here on the S&P 500. Like if we get this pullback, I think that you kind of broke that down with a it's innocent until proven guilty approach. Like if it comes down to this level and it hits that level, most likely it is innocent and it will continue. I mean, the trend is just so strong. Indices are so strong. But there is also the interesting scenario where if it comes out as, guilty suddenly, if it's not able to hold support, the rare, it doesn't happen that often, but when drops happen on the indices, they're much more violent than rises. And so there is that possibility. I always tell the story that Frank and I, when we first got into trading and investing in like 2016, 2017, we were looking at stocks together, and we watched for like 3 years, 4 years. The stock market just went up and up and up. During that time, it was just a bull market for stocks. And we just I remember being like, man, I can never buy stocks. They're just always up. And 2020 came along, and in one single month, it wiped out all of the gains of 4 years of gains. Like, so the thing is, even in a bull market, you have to be very careful that, you don't get overly committed to just the bullish side, because when it changes, it can be violent and it can go the other way, and it can drop a lot faster than it rises. That is for sure. It's the old concept that fear is actually a stronger motivator than greed. So something to think about. Anyways, same question to you, Marco. What do you think about the indices? Are you same camp? What do you think?
Yeah, so for the S&P, on this 1 hour chart, we're starting to print some bearish pressure, but it all depends on what happens next. 4 hour is still looking pretty bullish, but the daily paints the best picture, and this is absolutely extremely bullish. So my bias is for this to continue up just by gauging the momentum, looking at the price action. I'm seeing absolutely zero signs of stopping. NAS 100. So starting with the 1 hour, starting to see some bearish pressure. 4 hour, not that much. And the daily is looking very, very bullish. So yeah, I just see no signs of stopping. What would be a very bearish scenario for me? Well, a big red candle on the daily. That would be a major warning sign, and it would be a definite shift in momentum and the sellers potentially taking control. But now I'm just seeing no stopping of this trend.
Yep, that makes sense. And I think that's the thing. It's just a hard thing to bet against a trend like this. And I remember in 2022, another chart that looked similar, you guys might remember, was that dollar yen trade. Do you guys remember that? I mean, it was well, it might have been, was it 2023? Well, it was both 2022. I mean, the dollar yen, I think, I don't know if we were streaming together at 22. I know at least Miko had come on a couple times by that time, but even in 2023, the story continued again. Rate hikes were back on the table, and it was just like every day that dollar yen refused to go down. And then, finally blips would occur, and then immediately buyers would just step back in. And, but again, things change over time. Maybe not so much yet for the dollar yen. The dollar yen's kept going, but actually look at dollar yen as we speak. It's trying to break through this level. Well, we're here. We might as well do some analysis. Miko, what are your thoughts on dollar yen? This is another, again, the same story happens over and over. We hit a big level of resistance on the NASDAQ. We hit a big level of resistance on the dollar yen, and then rejection, and then one day we wake up and there's just one of these candles. That seems to be the story for the dollar yen. Without getting too fundamental, again, the Bank of Japan is really struggling with a very weak currency, and seems to be the trend here.
Yeah, I fully agree. I mean, dollar yen has been on a crazy run for seems like forever now, and it keeps pushing. And I think there's a strong possibility we do get back to this wick high over here. This is kind of where we had like a mini crash, if you will, with these heavy moves to the downside, and does look like a slow grind higher. And the main thing I'll be focusing on with dollar yen and the rest of the yen pairs is just the continuous higher lows that the market keeps printing in. We don't really break structure at all. The market is just very consistent with these higher lows, and as long as we maintain that theme, I'll just be expecting price to push higher. And again, you don't have to complicate things. If the trend's very bullish in this situation, you've got multiple time frames, even the higher time frames looking bullish, there's no need to try and complicate things. If I'm looking to trade dollar yen, I'll be only looking for buying opportunities until proven otherwise, proven guilty, like you said.
Yeah.
So yeah, things are looking very bullish here. So I'll be looking at pullbacks. So I don't really see a good 4-hour setup. Maybe for another big pullback, then maybe that could entice me. But on the lower time frames, it looks like we have cleared some resistance here. More kind of hourly chart, maybe 30 minutes. So some pullbacks on that look pretty good. Looks like we had already a retest in the low time frames. But essentially, if you come here, stop loss underneath that level will make a lot of sense. And yeah, try and ride that momentum for the day or maybe for the rest of the week. But at this rate, I think we've probably got higher prices in store.
Yep, should be interesting to watch. Again, dollar yen, a prominent currency pair. A lot of people watching that chart, and this breakout, we'll see if it can go anywhere. Same to you, Marco. Dollar yen. What are your thoughts on it?
Sure. So for dollar yen, let me go to the 1 hour first. I think it's gonna be pretty, choppy and range bound as all of the other JPY pairs are, except the Aussie JPY. So we just broke out of this structure. Is this enough momentum for me? Not really. I would like to see a bit more. 4 hour, just broke out of this structure, and then the daily is looking really corrective and flat. What I would like to see for a bullish scenario is more bullish momentum right here. So like a big blue candle, that would be nice. But for now, it's looking the same as EJ. So very flat and corrective. And for example, the New Zealand JPY, very flat and corrective as well. So yeah, I couldn't really pick a side. Most of the JPY pairs are looking kind of flat and corrective and range bound at this current point.
Yep, and I guess last chart for the day is the old Bitcoin. We talk about every time. Someday, we're either going to look back on these videos and be like, "Wow, is that 65,000?" As in that was really high or that was really low. And I don't really know the answer to that. I've mentioned recently that if we do get big dips, I like the idea of building a longer term, highly speculative position, fully understanding that 100% of my money could go away that I put into it, or it could quadruple. And I like that risk reward. I think that Bitcoin, my long-term thesis on Bitcoin is, why hasn't it died yet? If it's such a, worthless digital thing, why are so many people still putting their trust into it, still bidding it up? And so, my thought is we've talked about this choppiness recently, but if we get some bearishness, if we get some bigger pullbacks, I may build a little bit of a position. I know both you guys watch it on a longer term basis as well, but Miko, what are your thoughts currently on Bitcoin?
So yeah, it's similar to yours. I still do like Bitcoin to the upside longer term, purely just looking at the technicals, how things are looking. However, we are taking our time at around 70K here, and the longer we consolidate, the less optimistic I am of seeing a breakout soonish. I do think we probably have a great chance of seeing some more downside before pushing up. So that's kind of what I'm looking at. We had a couple attempts to try and break out of this descending channel or flag pattern. Had a couple attempts, failed both of them, and now we're kind of just rolling over. So I feel like we'll probably get more of this price action and probably soonish end up back at the lows here. Maybe even test some areas down here around 52K. even high here, I wouldn't be surprised. But there's still a lot of momentum in Bitcoin, and I do think when we do see lower prices, I think people get excited again to try and buy it back up. So longer term, I think we still do have upside, but at the moment, not looking too good. So I think we've got another pullback.
Yep. Thanks for breaking that down. And I guess same question to you, Mark. Are you feeling the same way? Still just choppy, but you know, I feel like it's good to still talk about it, keep it on our radar, because someday it will be looking different. We'll all be talking about it again. So what are your thoughts on Bitcoin?
Well, I just want to mention quickly the use case of Bitcoin, which I have been discussing with my friends a couple of weeks ago. And they said if you want to send $500,000 to someone and you do a bank transfer, you're going to get like 5 questions from the bank. Why the hell are you transferring such big amounts? And it's going to take like 2 weeks. But with Bitcoin, it's going to happen instantly and no one's going to ask a thing. So that's a really good use case. And they're kind of getting me.
Use case,
yeah, they're kind of getting me on their side. Also, all of the prop firms, they pay out in Bitcoin, right? So they are using Bitcoin, and it's like millions of dollars as well. So I think the more I think about it, the more I see a actual use case of Bitcoin, which I like, and that's a really bullish long-term scenario. So just
the technology is incredible if you think about it. You know, it really is it does what it kind of is intended to be. It's an uncentralized exchange place, and as long as people are all kind of on the same page that it has value, who are you to tell them that it doesn't? You know, if everybody is thinking it is, you know, currency, I mean, if you pull out a dollar bill, it's a piece of paper. It's the same thing. You know, it's just people subscribe to thinking it's money, so it becomes money. And technically, same thing with gold. Gold just has 5,000 years of a track record of being money. Bitcoin is so volatile because it has not even, you know, 20 years. I think it's less than 20 years old. So, certainly something to keep an eye on. And I am longer term on the bullish camp as well. But just, you know, for me, it's like, how do you value Bitcoin? Here's how I would give it a guess. If I want to, on a longer term cycle, be bullish Bitcoin, I'm going to buy it as almost a leverage bet on risk on or risk off sentiment. So basically, if the stock market's at all-time highs, it's going to be hard for me to touch Bitcoin because most of the time, Bitcoin's going to be doing the same thing. But I like to buy stocks long-term and buy Bitcoin long-term when markets are very, very fearful. Same thing, like you could literally just say, well, when the NASDAQ goes down big, I'm going to buy some Bitcoin. And I feel like that's, from a longer term perspective, how I'd like to play it. Basically, how do you tell when it's overbought or oversold? Well, it's all sentiment driven anyways. Wait for sentiment to get horrible for the crypto world. That's when you want to buy some Bitcoin, at least in my opinion. And then again, you want to just kind of hold it throughout time. So that we'll see where that goes. But if we get some, you know, bearish sentiment for crypto, we'll see how it goes. And I just want to say one last thing before we move on is, you know, even in this consolidation, a lot of altcoins have really been struggling. But just imagine what would happen to altcoins if Bitcoin actually saw some downside. You'd see a devastating landscape. It would be trenches out there. But anyways, guys, thanks to both of you for coming on the show here today. We've been, you know, again, having you guys come on way more often, which has been awesome. We've had a lot of positive feedback. The guests love the collaboration stuff, and I certainly enjoy them myself as well. So with that said, we've dropped some links here in the chat. Everybody who's watching, we've got Marco and Miko's YouTube channels, both linked here in the live stream chat. Please do us a favor. Go subscribe to both of them. Go show them some support for coming on and helping us out in making these shows what they are. So Miko, Marco, thank you guys both for coming on today.
Thank you. See you next week. Bye.
See you guys. All right. Yeah. Again, pushing on here. We've still got more of a show coming, so don't go anywhere. We got more stuff. Let's follow up on some things that are moving here. Gold up, 0.44%. The S&P 500 just slightly positive here. The NASDAQ hanging on to green, and the Dow Jones really hanging on to green today. And when I say hanging on, I mean that's at 0.06 on the day, so really hasn't got a huge promising day so far. The Russell doesn't take much. The Russell is like the altcoin of the S&P or of the indices recently. So, it's been a little bit rough on that front, but Russell, if I am going to get bearish at any point on the indices, it would be mostly on the Russell. I've traded and made some good money, even on the short side in the Russell recently, because it's been, a big underperformer to the other indices. That being said, we're going to be taking a look at a lot more charts here. We've got a guest coming on in just a moment who's going to be picking up the stream again. We've got James from Elite Traders, so should be fun to hear his thoughts. Before we segue, I just wanted to mention again, if you had not already heard, we're doing our VIP discount that is ending soon. It is currently 55% off to get memberships within the A1 trading community. You get all the trade alerts being sent by my team and myself, of course. We trade everything from gold to indices to FX, commodities, and so much more. So if you'd like to join us, the link has just been dropped in the chat. Take advantage of that. Come join us, 55% off while that discount is available. With that said, we'll be right back. We'll take a quick break and set up to have Forex James come join us on the show. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, and we are back with James from Elite Traders, who's here again. What's up, man? How you doing?
Hey, yeah, I'm good, thank you. How are you?
Good to have you back on the show. And this has been an awesome collab here recently. Just I was mentioning this just a little bit ago, James. It's so cool to be able to do this where we can kind of bring in a rotation of people from all over the world who have been doing this stuff for years and take it very seriously, and give more of a platform as kind of a community here to people who are doing this stuff for real. And I know you've been doing it for a long time. Been taking over some of the shows. We really appreciate it, and people are loving your segments. So by all means, if anyone is watching and they'd like to check out what James has to offer with Elite Traders, their company has been around for a long time in the industry as well. We're going to be dropping the link to their website for you to check out. James, they offer signals, they offer all sorts of different great resources to traders, and offer some great valuable content as well. So James, I'm going to leave you the show if that's okay. Just take over for a little bit here. And again, that link to your website will be dropped here in the chat in just a moment. And you got the show. Enjoy it, man.
Thank you.
All right.
So yeah, good. So guys, this week, hold on, screen. Yeah, okay, cool. This week has been really, really good. So I can't remember when I was last on. I think it was towards the start. It might have been a day or two ago, Monday or Tuesday. So what I will do is show you a live account. I know that Nick's quite big on live proof and things. So this is actually quite a new account. So I've moved to IG. I've started a spread betting account just for tax purposes and some other business related matters. But yeah, you can see pretty good returns this week. So this is past 7 days. Took 2% risk on a oil trade. Sorry guys, let me just sort camera out there. Took 2% risk on oil. Unfortunately, that was the biggest loss this week. But other than that, it's been pretty successful. So that's that. Wanted to show you guys that I actually do what I talk. So Euro Australian. I just showed you the results there. We took this in the Discord. So very, very simple trade. This was driven by economics. We took it on a 15-minute time frame. Very simple sort of breakout of the previous levels here. So you can see we had a channel to the upside. And then we started to break down and consolidate. So we saw this channel became invalidated. Then we came a push down. And this is driven by the European political problems. I've been speaking about this for, I think, the past 2 or 3 weeks now, or the past 2 weeks or so. So yeah, I won't go into that too much, but we also have a hawkish RBA, which is the Australians. So they provided very nicely. So this was kind of a no-brainer trade. It was very clear. But if any of you guys do follow me on Twitter, you'll see our original take profit was here. We trailed our stops to just these previous highs, and we were stopped out by this move here, which was quite unfortunate because, we were less than 1 pip away from our take profit. So, once we started to see price come back down, we entered a scalp, and overnight we hit take profit for just a quick 1%. Now we are back in this trade. I am unfortunately not allowed to show that right now, just some contract problems, or not problems, contractual agreements. But we have Australian Swiss as well. So this one is currently open. So again, I'll show you that because I'd like to start showing you guys some more live things, some real proof, not just trading view charts. Here, 1 second. So you can see that's open right now on IG. Really nice move to the upside, entered here. Basically no drawdown on that. So yeah, very simple. Again, I've shown you this strategy before. It's just a fib from the low to the high. And again, we've got positive Australian dollar with the RBA. It's hawkish. So bullish overall. Very nice trade. But yeah, I mean, that's it really for open positions. The only other thing really I'm too bothered about is wheat and Euro New Zealand. I think my camera keeps freezing. It's been doing that recently. I'm not sure why. But yeah, if you guys have questions, feel free to drop them. Gold, I'll cover gold in a moment. So yeah, Euro New Zealand looks really, really nice. So if you guys don't know, we've obviously, well, like I just said, we've got a hawkish RBA. So New Zealand is right next to Australia. Their currencies are correlated-ish. They're not, they're not direct, obviously, but the Australian dollar can influence the New Zealand. So if we have a pretty strong Australian dollar, it's safe-ish to say that the New Zealand will be following after it. So yeah, and then we've also got the weak euro that I've just mentioned. So it makes sense to look for shorts on this as well. Problem is, I missed my entry. So obviously my bread and butter is this break, the retest into a 50% pullback or into this golden zone. So in between the 618 and the 50, and then a continuation to downside. So I missed this initial entry, which should have been right here, but unfortunately, yeah, it didn't get into it. So now we're just waiting for either a pullback into this level again or a continuation to the downside, and then I'll scale in on the next pullback. Gold, so we'll cover gold. So I think I've done gold every time I've been on the show now, but nothing's changed in my point of view. Overall, I am bullish. I don't see any real reason that we wouldn't see gold go higher. However, the problem is, just for me, technically, it's not in a great place. So on the daily chart, this would have been a great entry, pull back down to the double bottom. And again, I think this is a fib level as well. It is. So this sort of whole zone here is valid in my book, but obviously I'm not in it, which is a bit unfortunate. But at the moment, it's in between support resistance. There's not really much there on even the lower time frames for me to be too interested in actually entering. So overall, definitely bullish bias, but yeah, I'm not looking to enter a trade on here. It's more a case of happy to sit on the sidelines, and if it does go higher, if we do see a breakout on gold, for example, let's say we break out above the previous all-time high, or we either come down to this resistance or this one, either way, and then we can potentially, or I will potentially look for a long something like this. That's my game plan. But yeah, while it's in this sort of range, it's not, I don't care what happens from here. Really, I'm happy to just watch. US 30. So I actually don't really look at US 30 these days. It's kind of an asset that I just don't really touch. So personal trading rules for the indices, specifically the US indices, is I only buy. I won't short unless there's a strong enough reason for me to break the trading rule. So it would be something like COVID or some war or something that would happen, like a black swan event, they're called, that would really drive the indices down. But yeah, generally day to day, not interested in going shorts because the overall drift of the market is to the upside, or the overall trend. Having said that, let me see if the EDGEFINDER says anything on US 30 indices. So it's neutral, not swaying either way. So because it's neutral and I only buy, that's obviously telling me that it's long, but there's not enough reasons there to go long yet. So overall, let's just do some chart analysis and see. Yeah, there's not really much here, to be honest. So this, again, it's just, I'm not trying to be super vague. I know it might come across that way, but I'm just being transparent about the way I trade. If I wouldn't look for a trade, I will tell you that. I'm not going to try and force something just so I've got, I can give you guys some content. But yeah, this is kind of the only thing here that I can see is this fib level. So from the lows to the previous highs, we do have a level of support that's sort of holding here, but even this isn't strong enough for me to enter. We can see that prices played around here. We've also created a new swing low. So actually, let's just draw that here. So that's probably more valid. So yeah, not really in my book. You can see this was the stone was broken, held above, and now we're sort of just ranging to the side. But yeah, it's not really much there for me. HK50 USD CAD. We'll do HK50. And then we can move to dollar CAD. So I don't trade this pair at all. So I'll give you the best I can. Let me just take a quick look. So the daily is still bullish. Let me see if, again, this is just another pullback. It is. So again, this is why I really like this fib. You can see on all the charts I've used, or all the charts I've looked at, this fib is valid in some way. And it's a great place or a great method to try and find these pullbacks. So if I was looking at this in hindsight, this would have been a valid trade after this bullish candle close. I'm potentially targeting the previous high. But obviously that's the daily time frame. So it would need some sort of data to back that type of position up, which I don't have. So technically looks bullish on the daily. So it's now a case of waiting for the hourly and the 4 hours to line up with the daily to provide that entry to the long side. But yeah, I think, yeah, I might do some research on this after the stream and see if there is any reasons to go long. But yeah, it looks quite good to me technically. We can do dollar CAD. Again, I just find the EDGEFINDER. I think I closed it. 1 second. How have your weeks been, guys? Have you made some money? Have you lost money? Break even? So we're looking at dollar CAD. Just give me a second. Okay, so it's bullish. We've got a score of 2. Do we? No, we don't. So COT, yeah, COT is very bearish actually. We see 81% short on CAD. Oh, sorry, bullish actually. I've got that wrong. So for short CAD, Seasonality is bearish, retail is short. So looking actually towards the upside. However, we do have this really strong level of resistance on the weekly chart. Made money and break even. That's good. Number one priority is capital protection. So we do have this really, really nice level of support. So I wouldn't really be looking to trade this. Actually, potentially I would. Actually, I'm lying. So let's see on the lower time frames. So target 1 would be this weekly level. Target 2 would be the next weekly level. So it's a case of, can we find an entry? Again, I need to reinforce this. This is on a technical standpoint. Obviously, COT is bullish, but you can't just rely on COT data. So please conduct your own research, do your own due diligence before following what I say. So I think this is quite simple, actually. So all it would be is hopefully a pullback to this level of support. So you can see previous resistance broken above. Now it's holding as a really nice support, and a take profit up like that. Stops below these previous lows over here. So use this as our support level in if we end up in drawdown. So that would be the idea. And then once we reach the target, or if we reach the target, then we would go onto the daily and sort of watch for the retest. So we need to see the breakout and then potentially enter again, if this trend holds up to something like this. So that would be the game plan. Euro dollar. I'm actually not really a fan of euro dollar at the minute. So I'm bearish on both. I'm bearish dollar, bearish euro. So this wouldn't be something I would look to trade, but I can definitely do some analysis. So the dollar is not really doing too much, actually. So if we look on the H4, it's kind of stuck here. So there's not really much going on. It's not trending, which isn't too great. So yeah, I'm bearish dollar, bearish euro. So again, don't want to be trying to go long or short. However, I think, if I had to give you an answer, if I had to make a decision now, it would be to the short side. I think I'm more bearish on the euro than I am on the dollar. But again, that's still if I had to. I'm not saying that I would take this. And stops, I assume, would just have to be sort of in this level. But yeah, I'm not really happy with this. Euro dollar just looks like a mess. It's not really giving me much. Let's see this fib level. Yeah, there's nothing here for me, to be honest. Unfortunately, I can't give you any real ideas on this one. It's pretty disgusting. I mean, the daily time frame is clearly moving to the downside. We can see that, it should be pretty clear. So yeah, I mean, if we're just following the trend, bearish, but as again, just not super happy with that one. German 30, NASDAQ, made money and break even. I read that. So German 30, sorry. So again, my personal rule is we only go into long positions, but I mean, imagine trying to short this. It would be a world of pain. You'd be crazy in the red. So it's like, why would you try and get this little short right here when you could just wait and hold a long position and catch all of this move? That's the main reason for not shorting indices. It's a bit of a tricky game to play. It's very, very difficult to get right on a consistent basis, especially when you're doing more long-term positioning. If you're scalping, then fair enough. You may be able to catch some good short positions, especially on things like New York Open, London Open. But yeah, generally speaking, not very nice. Let's see. So I was I was looking for longs on this actually not too long ago, but I just can't remember why or where, which isn't very helpful, I know, sorry. But yeah, I think the daily's a bit flat, you know, the past 4 days, well, 3 days and today, not really anything happening. So having said that, 4 hours is not looking too healthy either. Again, I'm sorry guys, there's just not much here. So yesterday we had closed markets, which again, it provided very slow, well, basically no momentum and no volatility. And today is Thursday, so yeah, not much happening. So I'm not really looking at anything. I've made money this week, so my watch list is pretty empty. But what I can do is we can have a quick look at wheat. So wheat is one of my best watches at the moment. So when you look at things like wheat, corn, coffee, you need to take into account the weather cycles. That's one of the biggest drivers of these commodities. Obviously, not so much with gold and silver because they're metals. They're not, you know, food sources or agricultural things. But yeah, we're looking to short coffee now. Looking to short wheat now. So we're looking just to have a pullback to this previous level and then take it down to the sort of previous lows around here. And this is the 4 hour, so it'd be a swing trade. But yeah, we'll see. I mean, you can see once we see a change in the weather cycle in wheat, we just see it fall off a cliff. This is a huge melt. It does this over and over and over. So if you zoom out to sort of the weekly and the monthly charts on these commodities, you'll see patterns just repeat and repeat. So yeah, you saw, you know, spike here, weather cycle changes. I mean, there's other things, obviously, not just weather cycles, but that's what I'm currently paying attention to on wheat. New Zealand Swiss, yep, for sure. Oh, I've already got some analysis on here, which is nice. Yes, actually, yeah, okay, interesting. So actually, this is very, very textbook, and this is why I've got this drawn out, because it's so simple. So we've got this, let me remove the position. So we've got this fib level from high to low. We have a 50% level, or a 50% pullback level that lines up really nicely with this previous level of resistance, which is now, resistance. So now we've seen a breakout, touch support, rejected support, and now we're coming back up to this resistance level, which coincides with the 50%. So ideally, I would be targeting the fib extension. Stops would be above the moving averages, above the golden zone. I don't think it's necessary to have a large stop on this above the previous high, because I'm quite bearish on the technical side of things. But having said that, you know, I've been saying that I am quite bullish on the Australian dollar and the New Zealand dollar. So yeah, economically, I'm not too sure about this one, but technically it's really, really nice, and I really like it. It's almost perfect to what I would like to happen, you know, on every trade. So yeah, I'd be shorting potentially even down to this wick. And then, you know, if you really want to be aggressive or you want to go for a really long-term target, then potentially down to the really, you know, these previous lows at 0.5244. But yeah, that's my outlook. Again, we can just have a look and see if EDGEFINDER gives us anything on this one. Because I think, yeah, I'd be looking really to go long. I might take a small position. So if I see something like this, if it's a perfect technical setup like this one, I'm happy to take it even if the data is not there. And it's just on, you know, very, very small risk. I would never put anything above half risk on just a technical play. But when you take into account technical analysis on larger time frames, so if anyone watched the, I think it was Tuesday stream, I was showing you that Credit Agricole, and I think there's quite a few banks. I know BNP Mellon, I think it is also short euro yen. And if you look on the monthly time frame, it's just because of a double top, and there is obviously some data aspects there as well. But support, resistance, and those types of things hold up a lot stronger on higher time frames. So it's not necessarily a bad decision to take some plays based on technicals if it's if it is higher time frame. Actually, you know what? I think I have been lying to you guys, so I apologize. I think I've been getting mixed up a little bit. So if we look on EDGEFINDER, very, very bearish. So we may take this one, actually. I really like this. We may take it live. So we've not quite met this 50% level. You know what, guys? Should we take a trade live together? Again, please don't take this. Is not financial advice. Don't copy this. I'm not giving you a signal. Just, it lines up with my strategy, so I'm going to take it. So stops are there. So again, you can see live account. I'm not lying to you guys. Stop is at 0.5522. 5522. There we go. Not going to take too much risk on this one. It's only a baby account, really. So we'll go in with slightly over 1%. Because like I said, this isn't a huge account, so I'm not too sure. Sorry, I'm not too bothered about taking increased risk on that one. So there we go, live trade for you guys. If you're interested, let me get rid of that. So I'll just run this one down a bit more, so you guys are a bit more clear. Score overall is -11. COT data is flat. As I said, I'm not too bothered about COT data. It is what it is. If it's in my favor, then fine. If it's flat, then fine. Not too worried about that. Retail is primarily long, which is nice. Seasonality is bearish. Trend readings bearish. Inflation bearish. Interest rates bearish. Manufacturing, PMI, employment change, unemployment rate. It's all very, very nice. So let me just see. So GDP is, where's GDP gone? Economic data, GDP is here. Okay. I'll have to monitor this one, but I'm very, very happy with that. So yeah, that's that done. So that's my last trade for a while because, as I said, I've had a really, really good week. We've already got 2 positions in profit. So yeah, quite happy with this one. USD JPY, we can definitely take a look. I've got a bit of grievance with the yen, really, because it's one of these things. It's far too risky for me to take a trade on, just due to intervention risks. I mean, I don't think we'll get an intervention yet, anyway. But it's just that risk of it could happen, and we would never know. Or we don't get any warning, until it's too late. So it's, I'm not willing to put my capital at risk for that. So, yeah, that's really it. And, we're coming back into this sort of danger zone. You can see when we were here, rejected very, very quickly. We've not managed to reach there since. We are moving to the upside, but not very nicely. You can see these candles are very ugly, really. So yeah, the trend is there. However, it's just not clear enough for me. It's not worth the risk. I am actually more looking towards going short. And I've said this in every stream I've spoken about the yen, but this isn't a short-term target. I'm not looking to sell tomorrow or this week or even this year. I'm more looking for a catalyst to go short, for carry trades to unwind. And that might be when Fed starts cutting rates towards the end of the year into 2025. So yeah, that would be the play for me. But yeah, not looking to trade this. I'm not really got any FOMO about missing this whole move. Made money on the yen, but yeah, nothing, not held any long-term positions on this one. I actually have a friend that's in Canary Wharf that's stockpiling yen. He's got a bank account that, one of those international bank accounts, and he's just swapped some large amounts of money for yen as an investment. It's very, very rare that you guys will ever see a currency as an investment. I think the yen is probably the only time you'll see it. You may see it in other things like emerging markets. So, for example, if you bought rupees now, in maybe 100 years, India's economy might be a lot stronger. So you may see it in situations like that, but that's a bit more of a hypothetical rather than something that's actually happening. Devin, James, looking at the hourly on USD CHF, is that not also sell based on your strategy? Let's see. I may have missed something here, guys. So I normally do my analysis on the H4 and I'll execute on the hourly. So it is, yes, it's part of it. So this would be quite nice if I was looking for a short-term position. So if you guys are a bit confused, on the Elite Traders website, I've got a 20-minute video that explains my strategy, and this is part of it, is these moving averages and the RSI. So this is nice. If I was looking to just trade this sort of correctional move, or looking for a correctional move, this would be textbook. However, I'm not looking to take short positions at the minute, or short-term positions, I should say, at the moment. So yeah, it's not strong enough for me because it's broken this fib level. I like to include fibs when I'm going into longer-term positions because it's a great confluence. Yeah, Devin, it does look good. Just at the minute, it's not quite there for me because, like I said, my profit target for the week has been more than met. My current exposure is already at 4%. So yeah, it's not quite there, and it's not convincing enough. There's no real reason to take a position on something like that. We see ADCHF is running really, really nicely. Dollar, let's see, actually. So current leader, strength-wise, is New Zealand. Then we've got Australian. So again, positive RBA or hawkish RBA. We've got the pound, euro, Canadian, dollar, and the yen. So dollar and yen are actually the weakest currencies at the moment. And this is looking at the 4-hour strength. So that's nice. If you guys don't know what this is, it's just a currency strength meter. Quickly, I'll show you how to do it. You can just add a currency here, click compare, and you'll get these, and then just change it to a line chart.
Good stuff, James. Love the analysis as always. And I gotta say, in terms of, we have all different types of guests that come on the show. What I like about your segments the most is your approach is clean. You're a trend follower. I love that. I also love your charts. I think they look so clean. I don't know if people in the audience agree, but I like you make me like consider the idea of going back to light charts for I used them years ago, but I switched over to dark just because my eyes. But
yeah,
your charts look great. Anyways, I wanted to say, for anybody who enjoyed that segment with James from Elite Traders, his website, we just dropped a link there in the chat. Please do us a favor. Go check out their website. You can also find James and his content on social media as well. Remind everybody what your Instagram handle is. I know that's one place you guys are pretty active as well.
Yeah, it's the same as the website. So it's just elitetraders.io.
Perfect. Well, there you go, guys. Again, James, thank you very much for coming on today. You're welcome back anytime. We love the collabs. Your content is great. And obviously the audience loved it as well. So thanks for coming on, James, and we'll see you next time.
See you later. Have a good day.
See ya. All right, guys, and now we're just going to have a quick break, and then our next show guest is coming on. He's back already, Nick Phillips. I'm excited to hear what he has to say in terms of latest market moves. We had a lot of news recently, so should be a good session. So stay tuned. We'll be right back with Nick Phillips just after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, and he's back. Hey, Nick, how's it going, man?
What is going on?
It's Nick Squared again. Good to have you back.
Yes,
And,
yes.
yeah. So Nick, we've had a lot of news recently. The overnight we had the Swiss National Bank came out with a surprise rate cut. Bank of England still seems to be closing in on rate cuts, but not quite there. It's an interesting time in the currency world, in the gold market world. Gold's going up, the dollar's up today. Stocks are still squeezing out a gain as well. I'm curious, did you look at any of those news events last night?
Oh yeah. So I was up this morning. It was about 3 a.m. for me. We traded the S&B decision live, and then went right on through to the Bank of England decision. And we did just try to take a stab at something for the unemployment data. I got a little trigger happy with that. I can explain all that in a little bit.
Yeah.
But as far as the S&B goes, they cut their rates. I send this data analysis afterwards as recap to my group, just with some of the highlights and some of the thinking behind our decision making. We ended up jumping into some sell positions here on the, as you can see, the 5-second chart. Once we started to get some clarity out of some of the comments from the bank. So they cut rates, which was expected. It was forecasted. So a cut by itself, when it's forecasted, is not something that gives us any kind of edge, because there's no real surprise to it. So we didn't take any sales based off of this. The real catalyst for ourselves was this headline right here, the S&B saying we are prepared to intervene in currency markets if needed. They've done this before. However, this is just generally seen as almost like a lack of certainty in the currency itself. And we tend to, if this kind of comment comes along with a cut, we'll tend to see continued bearish action in the currency. So once we got this nice little pullback here after the initial drop, price pulled back and showed us that it wanted to continue. I got in at the end of this engulfing candle when we broke this support to the downside. Just grabbed a quick 1 to 1.2. Got out right about here, and yeah, just a real quick scalp. We didn't stay in, didn't have a conviction to stay in for the day, although the S&P or the Swiss has continued to go to the downside. The lack of conviction was really due to the fact that the markets had about a 68% priced in expectation of this cut. So there's, I think, about a 32 to 32.5% wiggle room there for us to exploit any kind of opportunity if we did get the cut. And we did. I would have loved to have seen a hold, because that would have been a much drastic price difference for the Swiss. But, excuse me, we got this opportunity. And another thing that gave us conviction at our entry was the fact that the inflation projections moving forward have been reduced, even just slightly, but enough to give us some more conviction to get in on this trade. We've gone down about 0.1% every year for this year and the next 2 years. And following up with that, we see a renewed increase from the S&P. A renewed increase in geopolitical tensions could result in weaker development of global economic activity. Again, more dovish tones out of the S&P. This was something that kept me from holding this trade longer. Was we will adjust monetary policy if necessary to ensure inflation remains within the range consistent with price stability over the medium term.
Yeah. And what's interesting too about the Swiss National Bank is I think that they actually have lower tolerance for inflation than perhaps other central banks. A lot of central banks talk about like 2%, and now people are trying to question whether or not the Fed is going to even be comfortable when we're not yet at 2%. Meanwhile, the Swiss National Bank takes a little bit of a stronger stance. That's kind of their mandate is, it's their whole idea is they have lower inflation in other places. They have a strong reserve currency. It's clearly part of kind of their strategical approach as being the biggest bank in the world. So definitely some interesting stuff there. Nick, I wanted to offer also, if you would like, I was just mentioning to my team with your kind of all of your strategy and approach. I think a lot of people really enjoy listening to how you approach that stuff. If you're comfortable with it, you want to take over the show just for a little bit and kind of walk through your process for people who maybe have not heard of you before. And if you want to just kind of solo host for a little bit, I'll come back and join you in maybe 15 minutes, if that's good.
Yeah, I don't mind at all.
Okay, cool. What we're going to do here for everybody who's listening, we're going to drop a link here while Nick goes here. It's Nick Squared, so don't get confused. It's the other Nick. The other Nick is going to take over the show. And at the same time, we're going to drop the link to his social media so you guys can find him, keep up to date with him if you enjoy what he's got to share with you. So, Nick, you've got the show for a little bit. I'll join back with you in just a bit.
All right, sounds good.
All right, see you, man.
All right, see ya. All right, guys. So, what's up? Happy to be hosting. Happy to be here. Hopefully, you guys get some value out of what I have to say. So, I've pretty much covered the SMB rate decision. For the Bank of England rate decision this morning, we didn't end up taking anything. The reason was everything, the data that dropped, it all came out as expected. So, they held rates. This was forecast.
I think we might have lost connection, unless I did. Sorry about that, guys. We'll get it sorted out shortly. Let me know if you can see and hear me okay. We'll bring back Nick once he's all set, but I think we lost him momentarily there. I'm sure he'll be back in just a second. Yeah, so anyways, while we wait for Nick to come back, just an update on some of my current positions. USD CHF, I am stopped out, trailed out for a profit there. We sold this kind of recent pop. I sold into that move and then obviously gave back a lot of the profits, but still a win is a win. So I took that one out of the rotation, took USD CHF, took profits on that one inside of the VIP room. Gold, I'm still long. This one is turning into a pretty good runner here. Pull up my position, my P&L on this one. Floating a pretty good profit there. I've got my stop loss still below the lows. If we continue to pop through the, kind of levels of resistance here, I may look to start trailing my stop loss. My next target on GLD is like the 220 range, which is on the gold spot price. That's like 23.85, let's call it. I am looking for a potential break of this 4-hour chart resistance level. Again, here's the daily chart, 2300, seemingly holding pretty well. So we'll keep tabs on this. If you're not in the VIP room, again, we mentioned this earlier, but we're currently doing 55% off. It is our biggest discount of the year. We're doing 55% off for live stream viewers right now. So we'll drop the link to that. If you want to come trade with us, again, real trading, no nonsense. We're sharing all of the different updates that we're doing. I've got a couple positions right now. I was just about to write something up, 2 members a second ago, but we're long gold currently. I also have my TLT position. TLT is going against me here today. So here's one that's not going so hot. TLT was floating a lot more. It has given back a lot here today with the rates coming in from the Swiss National Bank. Came down lower. That really strengthened the dollar. The dollar looks really strong. And with that strength in the dollar, interest rate expectations in the US creeped up or were hurt a little bit by that story, which in turn pushed TLT lower. I'm happy to stay in my TLT position. I would like to see it continue to hold this 93.50 level. So TLT is a trade that I'm in. USD CHF, I'm no longer in, took profits on that. Gold in that trade, holding gold tight. Let's see if we can break this kind of upward trend line. That would be a very bullish signal for me to see, kind of these higher lows turn into a bigger bullish move to sort of pick up the speed that we saw off of the daily chart, right? We're holding support for now, and this is looking promising, but it's too soon to say. I think what would really be bullish, like really decisively daily chart bullish, would be a break of 2375, get back into the 2400s. Now you're talking, now you're cooking with gas. That would be my thought on gold. But again, I hold my positions long. I've got my stop loss below the lows. I'm going to be patient on this one and see if we can catch a bigger move. Stocks are, flat on the day. The NASDAQ is just slightly red. S&P is just slightly green. Gold is up today. Silver's up a lot today. Oil is up, and so on and so forth. Again, any updates or added new positions that I take will be added in the VIP room. And again, don't miss that discount. It is the biggest all year long. Show euro dollar. Euro dollar looks weak, but I don't really have any bias unless it's showing up on the EDGEFINDER. Let's see. Nope. So no trade for me on the euro. Maybe I look at dollar Swiss again. Maybe I look at the Russell, gold, TLT, Australian dollar getting a bullish reading. That one's probably coming down today. For the Australian dollar, I would like to see if we can break through this resistance. That would be pretty cool. But we will see. Show the EDGEFINDER top setups. Boom, there it is. That is the current top setups page. And both of my two positions that I have on right now, I'm happy to see that they're both very bullish on the EDGEFINDER. So that has continued to be a nice signal. Gold, we got long at that low kind of point in the 2300s. And I'm going to stay long on that one as long as we hold that area. Again, there's a 2300 support that seems to be holding. It's looking promising. But again, we are at the testing point here for this gold push. Very much going to see if we can get through this 2350 level of resistance, which lines up perfectly with this downward trend line. You might say, well, Nick, that's looking bearish. But again, the daily chart to me still looks very strong. And us rounding off the bottom, this looks more like a prospect for a possible breakout trade than anything else. We're just shy of 1% higher on gold here today in terms of a pip movement. I'm sorry, I don't use the word pip very often anymore, but in terms of a pip movement, it's a pretty substantial 6,300 plus pips off of the low. But in terms of percentage, why use percentage? Well, because I know some people are trading futures, some people are trading GLD, some people are trading XAUUSD, which is spot price. So price of gold is really kind of hard to use in terms of movement. So pips doesn't really make sense for a broad audience. Percentage makes sense whether you're trading GLD, which moves the same as gold, spot price, or futures, which have different prices, but percentage-wise will move the same. So that's why we use percentage in our conversations. S&P is still just flat on the day. NASDAQ, same thing. The Dow Jones jumped back, interestingly enough. Very curious as to why that happened. Dow Jones jumped here. Did you get some sort of opening bell excitement on the Dow? There goes gold. Keep going, keep going. Gold is really making a break here. This is awesome. Looking really good. We took out that level of resistance on the 4-hour chart, and that seems to be the push. Euro dollar. I just did the euro. I don't have any bias on it. There's no setups on the EDGEFINDER for it. From a technical perspective, it broke that level. It kind of broke its upward trajectory. It looks kind of weak with the dollar looking pretty strong. But not a trade that I would take. There's no confirmation on the EDGEFINDER, so I can't really touch it. Again, only trades that I will take have some sort of confirmation from the EDGEFINDER on them. EDGEFINDER looks at sentiment data, technical data, and economic data to generate bullish and bearish calculated outputs, which removes a lot of the discretion for me. Systematic trading has been a game changer for me over the years. Using more tools and data to help make decisions is just so much more. I can't even tell you the amount of like stress reduction having software help you with is so much better. Because when you're doing everything discretionary, like when you're making the decision, like what am I going to trade today? And oh, gold looks good, or I'm going to short gold, or I'm going to buy the NASDAQ. Like If it's all top of mind and not like systematic, to me, that's just a recipe for a disaster, because I need to have a systematic thing give me a, you know, a list of criteria that is positive or negative to my idea. Let's say that I woke up and I said, the euro shorts look so good right now. And I come to the Edge Finder and there's nothing there. There's been so many times where that happens, where I'm like, whoa, euro dollar, what's going on there? I think I want to trade. And then there's no reason for me to take that trade. And I save myself a lot of time and money because I don't take a trade. Or maybe I didn't even know what was going on with gold, and I see it on the radar here on the top setups page, and I go, oh, well, let's look at gold. Boom, it looks really good off the 2300, and that's how I spotted that trade. So something to think about. Hi, Nick. Just know I appreciate you. Well, thank you very much. I appreciate you too. Thank you for watching my content and supporting the work here. Yes, as just mentioned by the producers, there are also how-to videos on the Edge Finder. If you are confused on how to use it or you'd like to learn more about it, here's a couple things you can do. You can check out the playlist section and watch videos about the Edge Finder. And if you're on the Edge Finder, if you're saying, how do I use the Edge Finder? If you have it, really quick, click the help or report an issue button at the top. We have a full course under Edge Finder tutorials available on the website. So if you'd like to check that out, again, feel free, head over to this the help section on the Edge Finder, and you can just click tutorials. You can also ask about all of our different stuff here. We have, if you have questions, you can report a question. If you want to set up a call with a team member, if you want to get access to the new Edge Finder mobile version, if you want to get access to our trade alerts, and finally the Edge Finder's smart alerts notification system, all of this can be found on the Edge Finder's help page if you already have the Edge Finder. If you don't already have the Edge Finder and you'd like to get access to anything that I just mentioned, someone from our team would be happy to assist you with that. We'll drop the link to chat directly with our staff using the link here in the chat right now. That should be dropped in just a moment for you. Okay. Yeah. A member of our staff can help you with anything you need if you are lost or have a question or need a resource or something. So we will we'll continue to see if this gold market move can stay above a 1% gain today. Again, tapping into the upper limits of that trend line, but I think it has room to push higher. Okay, guys, I think Nick is back. I think the power outage has been conquered, so we will we'll bring him back into the show here in just a second. Bring him in here.
What is going on, guys?
It's good to see you back. Is everything good with the power?
Yes, so wild. I'm looking at my screen, about to start talking about the Bank of England, and then all of a sudden, my lights turned off. Everything turned off in the world. Sorry about that.
No problem at all. Okay, if you want to share your screen, we'll give you the chance to take the floor for a little bit again.
Yes, let me open up my charts, and then I will get my screen shared for you guys. We'll just go over here to data analysis for now. All right, let's see here. All right, so touching back on what I was talking about earlier with the Bank of England rate decision. So you guys can see, I know there was a question asked about how I go about sort of my approach to the markets. And when it comes to data, what I like to do is I like to present these potential scenarios. So I get an idea of the overall scenario, like the overall situation with whatever economy it is that I'm trading the data for. In this case, the Bank of England, the Great Britain pound. I like to keep tabs on what's going on in the economy so that when I go to my potential scenarios, I have my ideal scenario of the potentials. So I tend to have 4 scenarios. 2 of them are tradable and 2 of them are not tradable. The only ones I ever really break down in a data analysis would be the tradable ones. I tend to not bother breaking down any of the non tradable opportunities. There's really no point to break that down. For this morning with the Bank of England rate decision, in order to see a weaker pound, a dovish reaction from the pound, I wanted to see a vote split of 0 members voting for a hike, 6 members voting for a hold, and 3 members voting for a cut. And I wanted to see some comments out of the statement that said things along the lines that they think it's going to be appropriate to start cutting rates. They have inflation well under control, and they are feeling good about easing policy moving forward. Now, on the other side of that, for a hawkish reaction to be buying up the pound, I wanted to see 0 hike, 8 hold, and 1 cut. The forecast was for a 7 hold, 2 cut. So in this instance, on the dovish side, having one of the voting members move from hold to cut makes the forecast lean dovish, more dovish than expectations. And vice versa for the hawkish, if one of the cut members, because remember it was a vote for 7 hold, the expectations were 7 hold, 2 cut. If one of the cut members voted hold, that would shift the sentiment from the dovish side for the cut members back closer to hawkish. It's definitely not a hawkish outlook at all as far as the macro side of things, because there's 0 for hike, but it would shift it. If it's leaning dovish with 2, one of them leaving that cut would start to lean more hawkish. So we would have seen a hawkish reaction out of the pound. Now, what we ended up getting, I think we should be good here. Yes. Okay. What we ended up getting was as expected. We had 7 vote for a hold, an unchanged rate, and 2 vote for a cut. So we had no real edge to exploit here. And so we didn't take a trade with the Bank of England. Now, there were some interesting headlines that came with this, some statements. Bank of England's Governor Bailey does not repeat the May statement that he is, quote unquote, optimistic things are moving in the right direction for a rate cut. This doesn't necessarily close the door on rate cuts, but it is a interesting note that he did not repeat this statement, because in May he was very optimistic. He didn't say that again in June. For what reason? Not really sure. There's another piece of this whole puzzle right now that is interesting for us, and that is the fact that I noted it here in the data analysis ahead of the actual rate decision. The upcoming elections may have had an impact here, even though during the conference they said, let's see if I can find it. The MPC notes that the timing of the UK election on July 4th was not relevant to the rate decision. They said that in their statement. But because there's always this question of, is the central bank politically motivated? There seems to be that question, at least. Using this meeting as a placeholder to get us through the elections before the next meeting would make the most sense to keep up appearances, if you will, of being politically neutral. So this was sort of my expectation going into it, was that we weren't going to get anything actionable, because it was just going to be a placeholder meeting. We're going to wait until the next one or the one after that to really start making some decisions. We have an election coming up. We don't want, if we start to cut now, we don't want this to seem politically motivated. So let's just hold here for now, give really no forward guidance indications, and then we'll catch you guys at the next one, right? That was sort of my expectation, and it's pretty much exactly what ended up happening. Let's see. Yeah, there was, so you can see here, I noted no trades taken due to a lack of definable edge. There was no definable edge in this data, as opposed to the S&P rate decision. With them cutting, even though it was forecasted, there was about a 30% deviation there, 30% lack of a price in. So when we did get that cut, we had a little bit of an edge. Our conviction came from the intervening comments and the inflation projections lowering. So S&B was a little bit more of a clear opportunity for us. Now, our previous trade last night, I don't have it here in the data analysis. It's a little bit more of a casual trade for me. We took NZD GDP buys. We had gross domestic product figures come out for the New Zealand dollar, and they beat expectations at 0.2 as opposed to the forecasted 0.1, and significantly higher than the negative 0.1% from the previous release here. So that was a real simple. Where is, oh, my charts are still not loaded. Give me 1 second here. My power went out and my computer doesn't know what to do. So I will go over this from here while my charts load. The data dropped right around here. The issue that I had with this data that made me a little hesitant was the figures that came out we had one that came out right as expected. There were multiple pieces of New Zealand dollar data that came out. So quarter over quarter gave us this 0.2, which was higher than the forecasted. And then where is year over year? Year over year came out higher than forecasted as well. However, this one came out right at the top of the bank range, so it didn't surprise the markets. And because there was that lack of surprise, I had a little bit of a lack of conviction. That's where price action comes into play. When you get data that does give you a good indication of the direction, once the price action starts to line up for us on smaller time frames, then we tend to want to get involved. I had a couple members that ended up they got in right here while I was being hesitant. They ended up jumping in around 161,345 ish, right in between these two ticks. Meanwhile, I got a little lucky here. Price gave me a nice little discount off of these highs. Once it gave me this discount back to the area that I would have wanted to get in before, I went ahead and jumped in, got a nice 1 to 1.8, and got out within just a couple minutes. So that idea is, essentially with GDP, with gross domestic product, if you were having a higher result out of GDP, it shows a strengthening in that economy. And so as soon as that data drops, there is a discrepancy in where price is at the drop and where it wants to go. And we like to take advantage of that little move there to get in and out real fast. All right, touching on some of the other stuff that happened this week. The RBA held rates. Their statements, nothing really changed. Let's go pull up the media releases for the RBA. So you can see here, when you're looking at monetary policy decision statements from central banks, oftentimes some of their last paragraphs are going to be where you find forward guidance. And so the forward guidance that we got out of the RBA is the path of interest rates that will best ensure that inflation returns to target in a reasonable time frame remains uncertain, and the board is not ruling anything in or out. So this right here, this is what you would expect moving forward. And what we can expect moving forward is that the RBA is willing to do hikes, cuts, or holds moving forward. They are entirely data dependent. So it's really been an interesting week because aside from the Swiss National Bank giving us some decisions, the RBA and the Bank of England were both essentially nothing sandwiches out of the conferences this time. They gave us zero indication of where they're going moving forward. And that makes for the way that we tend to trade a little interesting, a little difficult. I'm trying to pull up my trading view charts on my actual trading view app, but it's not letting me. So I'll just pull up tradingview.com and we will try to log in here. Boom. So this is really interesting because I never look at this on my computer anymore. So it's in light mode. Typically I'm in dark mode on the app, the desktop app, but we'll go ahead and get this pulled up. All right. Good Lord. Delete all these alerts. That way, all these old alerts may start triggering now that I've logged in on the Chrome version of the app. Let's go take a look at the Swiss. Pull up my futures charts here. Leave. We'll go take a look at the Swiss futures, see how they're doing. We're still down on the day for the Swiss. This was where the rates dropped this morning and the statements dropped this morning. We grabbed a little scalp out of this area in here. I told my guys this morning that if they wanted to continue to try to sell this off, it was, especially when we got unemployment data from the US this morning and the dollar quickly faded those moves, there was really no reason to continue to try to like buy up the Swiss, even though prior to this, the Swiss has been on a tear. If you look at the Swiss on a daily, it doesn't necessarily look like it's been on a tear, but you zoom in here for the last 2 weeks, we've had nothing but bullish price action out of the Swiss. And some of the ideas fundamentally behind that is the uncertainties in the, how about USD CHF ready to go long? Thank you. Let me check that real quick. The idea behind the Swiss going strong, I'm looking at CAD futures right now, so sorry guys. The idea behind the Swiss going strong is the uncertainties in the Eurozone right now with the snap elections. So you can see here, it's actually been going long for quite a while, but the last couple weeks has been insane. And as far as USD CHF, let's see. Ready to go long. It's tough because currently, the Doxy is kind of strong. You're in the middle of, an uptrend here on the 4-hour time frame, making new highs and possibly new lows. And you've also got a strong Swiss. So you're trying to trade, you're trying to go long a strong currency versus another strong currency. That's tough. It's not something that I'm going to get involved in by any means. My edge is present when we get economic data that creates displacement between where price is and where it theoretically is about to be, based on the data that comes from the real world. So charts, based on the way that I trade, charts are almost secondary. I get my initial bias from the data as it drops. So for me, the two biggest things that I'm moving forward to, gold is reaching 4-hour resistance. What are your bias on the next move with regards to your comments on the dollar index? answer that in a second for you. The two things I'm looking forward to the most for the rest of this week, which, you know, we have tomorrow, is the German PMIs, the three things really: the German PMIs, the pound PMIs, and the US PMIs. So it's basically a PMI day tomorrow for us at Limitless School. We will be trading all three of those prints. As far as my outlook on gold, let's go check that out. Gold is obviously just going insane, absolutely parabolic. Let's check this out. Kind of just in the middle of this daily flag area. Just this sideways consolidation zone following a big rally to the upside on the daily. Now let's see on the 4 hour. This is my hindrance with gold and why I tend to only trade gold at very specific times. Theoretically, gold should be inverse to the dollar. It doesn't always work out like that. We know that, you know, we can see times where the dollar has been going bullish and gold is also going bullish. For me, the times where I tend to trade gold, I would take a trade on gold when geopolitical tensions hit the market and gold absolutely goes insane. A good example of that, a really good example of that from recent history is October 7th. Right here, October 7th was a Saturday, I believe. So October 7th, Hamas and Israel, that whole thing takes off, right? Obviously, there's a lot of history there, but I believe that is the most recent attack. That is when this most recent episode of attack and counterattack kicked off was Saturday, October 7th. So you see the markets on Sunday, October 8th, just immediately start to price in that risk sentiment. Markets got scared. Everybody's scared when war pops off. This is essentially a new war popping off. And we have seen since then just really, I think the Israel and Hamas tensions, they sort of fizzled out here within a couple weeks for the gold reactions. And then we continue to see gold go bullish following that. There's, I think, some other fundamental reasons for that. When war starts, the market reacts really volatilely for, at least historically for gold, at least a couple weeks. And then it starts to fizzle out. And then some other driving factors will be behind maybe a continued bullish move for gold, which we've just seen gold go absolutely insane this year. But that's a great example of a time where we had a tension pop off in the world, in the real world. A war happened. A war started October 7th of 2023. I went way too far back. And gold buys are in play for those of you that like to take longer term trades, day trades, and or swings. Now, another great example of this was right after the Israel chief of staff, or Hamas chief of staff, gets killed. This is not like the pretty side. You know, there's some moral questions that will come into play if you tell people that you trade when war pops off. You know, it's something I've been asked, like, oh, so you're profiting off a war. It's like, I mean, I'm not providing weapons for anybody. I'm not providing support for anybody. My job is to take advantage of opportunities in the market. And when war kicks off, there's a risk off sentiment that happens. People like to take their money and dump it into what's known as safe haven assets. And gold is historically the world's safest asset. So it immediately jumps to the upside when war tensions happen. So was it June 17th? It was not June 17th. If I can find it. Here we go. The Hamas commander. I believe it was a helicopter crash. Well, I'm not gonna sit here and do a search for the entire stream. So we will, alongside the weakening economic situation of the U.S. pointing towards a stagflation historically to great analysis. Yeah. So as far as making a determination of where gold could be going from here, I think it also depends on time frame. You know, what kind of time horizon are we talking about? Are we talking about the next few days? Are we talking about the next few weeks, the next few months? It's almost like anybody's guess. I think gold is closely related to inflation expectations. So if we look at inflation expectations in the U.S., I believe they have been coming down. Inflation expectations, a slight tick up in the last couple days, really the last day or two, but for the most part, it's coming down. So with inflation expectations coming down, you would expect gold to also be coming down a little bit, as it's a hedge against inflation, right? So again, this isn't the sort of approach that I tend to take when I'm looking at the markets, because I'm not a swing trader. I'm not somebody that likes to get in and hold for days at a time. Let's take, for instance, a situation like tomorrow with the we'll take US PMI numbers into account for tomorrow. Let me pull up that calendar, and I'll type up the highs and lows that we have for you guys. If I can find them. And I will give you guys my plan for tomorrow. All right, so we'll go with German CPIs because I don't have the range figures yet for the US CPIs. So, CPIs, PMIs. And there are two scenarios here. So we have an expansionary scenario and we have a contractionary scenario. And an expansionary scenario is going to look like the euro strengthening, right? So that would be front half euro buys, back half euro sells. And that's going to be if we get manufacturing PMI above the bank range figure of 48. Give me 1 second, guys. 47.9, sorry about that. And then the services above 55.1. So typically I would have this pulled up here on my computer, but because I had a power outage earlier, I am having tech difficulties loading up my calendars on my desktop. So I've got them over here on my laptop, and I'm going to put them here for you guys. So the idea here, yeah, so Forex Factory, where can I find inflation expectations? Inflation expectations is a, there's a chart for it, I believe. I'll try to touch back on this in a second. Essentially, you guys could take this forecast that I'm showing you right now, screenshot it, save it for tomorrow. And when we get German numbers that come out, if they come out above these figures, the German PIs, you could take euro buys to the upside, right? On a lower time frame. Same thing with the contractionary scenario. You're going to be looking at euro weakness, which is going to look like euro sells and euro back half buys. For those of you that don't know, when you're getting in a pair that's euro USD, you are selling the euro against the secondary currency. When you get in on a pair that's like can't think of anything front half euro, but when you get in a pair that is front half euro, you are buying the other currency against the euro weakness. So euro weakness is indicative of a contractionary euro economy, and so you're going to want to be selling the euro. For me, it's just going to be euro USD sells because I'm only trading the futures markets. So in this case, I want the manufacturing PMIs to come out lower than expected. And the low expectancy of the bank range is 45 for manufacturing, 45.0. And then for services, it is 52.4. So what I'll do is I'll take these numbers here. I'll go to Financial Juice and I will plug them in to the PMI numbers. We also have composite. Let me get composite for Germany real quick. Composite above and composite below. Again, if you guys keep seeing me look off screen, it's because of the technical issues I'm having because my power went out. So we got 53.4 is the top of the bank range, and 51.9 is the bottom of the bank range. So when you look at something like Forex Factory, you have this forecast right here, 46.4 for manufacturing and 54.4 for services. Another service you can use is Financial Juice. I have the paid version. I believe you get a lot of this for free with the free version. They have the forecast for the services as 54.4, manufacturing as 46.4, and composite, which Forex Factory doesn't even list, as 52.7. Now, this number is it's kind of like the middle, an average of all of the banks. So not all of the banks, but all of the banks that are polled for this piece of data. And so there's a high number and a low number within that range, and then all of these numbers in between. That is the real market. That is the institutions that actually have the liquidity to move the markets, right? We're just little fish hoping to kind of jump in and tag along for the ride. So oftentimes, if you're trying to trade data, sometimes this number will come in. Let's take service PMI, for example, and let's say it comes in weak. It comes in at 54.0. Well, the bottom of our bank range for services was 52.4. So because it came out below expected, but not outside the surprise factor, if we just pretend that this is soloed by itself, you might not see the euro react the way we would expect it when it comes out below the forecasted. If you click here on services, actual greater than forecast is good for currency. We can assume that actual less than forecast is bad for the currency. So we'd be selling the euro. The problem is these numbers don't account for the bank range. So oftentimes, if you get even lower than forecasted, but not outside the bank range, you're not going to get a reaction. Remember, I said earlier, there's 4 different ways. There's 4 different scenarios that we account for. One of them is as expected data, or inside the bank range data. That's considered as expected for us. We don't trade that because there's no definable edge. We need that number. We need the actual for services PMI out of Germany to come out below 52.4, not just below 54.4. So there's a very, specific difference there between trading the bank range figures and just the forecasted that you get off of Forex Factory or tradingeconomics.com or, Daily FX or any of the typical news outlets that traders use. Hey, Brian. So this is, like I said, this is the outlook for the Euro PMIs dropping tomorrow. I'm going to go ahead and publish this to my data analysis section in my private group. You guys can feel free to take a screenshot of this. And, you don't have to trade it tomorrow, but screenshot it and watch how it comes out. And remember, there's 4 potential scenarios. These are 2 potential scenarios that you would trade. The other ones that you wouldn't trade would be, let's say, let's run some potentials here. The actuals come out as this. So manufacturing PMI, let's say it comes out as, we'll call it 49. Services comes out as 57. And composite comes out as 55. Now, these are just completely made up numbers, and I'll run with you. I'll run it through with you what these different scenarios could mean for you. So we'll go like this. Boom. We'll copy, and we'll just do a couple. We'll do 4 different scenarios here. So in this scenario, let's change these numbers. The second one will go 44. 50 and 50, and this one will go 47 point, we'll go 46, 54, and 52. And then for this one, we'll have 49. We'll have services as 50, and we'll have composite as 50 as well. Okay, so in this first scenario, all of these numbers, 49 is above 47.9, so we're expansionary so far. 57 is above 55.1, so we're expansionary still. And 55 is above 53.4. So we're going to be looking for Euro USD buys in this situation. Now, with this second scenario, manufacturing came out at 44, which is below 45. So we're contractionary so far. Services is at 50. So we're still contractionary. And composite is at 50. We're still contractionary. So we'll be looking for Euro USD sells. You can take Euro JPY sells, Euro NZD sells, et cetera, et cetera. This scenario, manufacturing PMI came out as 46. That's not above 47 and it's not below 45. So it's in the middle of the bank range. Services came out at 54. That's below 55.1 and above 52.4. So that's in between the bank ranges. And then composite came out as 52. That's above contractionary and below the expansionary number. So all of these came out in range. That's a non-tradable scenario. We do not trade this. No trade. We do not trade this kind of scenario. Now, here's another scenario when it comes to data trading that we will not trade. Manufacturing PMI comes out at 49. That's expansionary. Okay. And then services comes out as 50. Well, that's not expansionary. That's actually below 52.4. That's a surprise on a contractionary side of things. So this is pointing us to euro strength. This is pointing us to euro weakness. Composite is pointing us to euro weakness as well. So we have two weakness. I meant to put, we'll call it 52, just to make it a little bit easier to understand. We'll go 52.5. So this is mid-range. Basically, what we have out of this is what's known as mixed data. So this one gives us a euro buy signal. This one gives us a euro sell signal, and composite is nothing. It's right in the middle of the bank range. It's you can't create any kind of bias out of that. So this is a no trade. It's mixed data. This is a no trade because it's as expected data. So the only two scenarios out of four potential scenarios that we take advantage of is if all the data points us in one direction or the other. All of this data pointed us towards euro sells. All of this data points us towards euro buys. So you guys can take this information, screenshot this. Don't screenshot these actuals. This is something I made up just as examples to show you kind of the ways that you could trade this data. Take this, screenshot it. If you have the paid version of Financial Juice, you can set alerts here. This is not a Financial Juice plug. I don't have a link to give you. But let's say for German PMI, service PMI, I need it to be 55.1 or below 52.4. So this program here will trigger a buy or sell alert if anything below these numbers print. So anything above 55.1, I'll get a buy button right here that prints for me. Anything less than 52.4, I'll get a sell button there that prints for me. And then I'll input all the data that I just showed you into manufacturing and composite as well. And if all three of them point towards a buy, then I'll get in on a euro buy within about 5 to 10 seconds. If all of them print sell, I'll get in on a euro sell within about 5 to 10 seconds. And then I close out. I'm closing out within a few minutes, and I'm just grabbing that low hanging fruit. Something happens in the real world. Economic data hits the market. Most of the time when you see these big, massive candlesticks on the chart, it's because of economic data. Something happened with data that pushed the markets to go one way or the other. Great example being unemployment that just happened. Let's go to the odd, and we'll go down to the 1 minute. Granted, it wasn't a sustained move because the data wasn't important enough, but up until 8:30, you see all these small body candles, and then as soon as 8:30 hits, boom, we have volume come into the market and price starts to move. So that the idea for us is that we like to take advantage of these moves as they are happening from the catalyst. Let's see where GDP happened. Perfect example, last night, GDP on NZD. Not a new, not a, like, I'm not replacing Nick. I am just another Nick, Nick 2. I'm Nick 2 on the A1 show. So yeah, I think you meant old one was cute. Yeah, I'm definitely not as cute. I trade a little bit differently. You know, I trade economic data scalps. For those of you guys that are interested in scalps, this is the best method that I've found for scalping and where I've really rounded out my edge. So you can see here for the GDP last night on NZD, we got in right here on this little pullback on the 1 minute and got out right up here. Nick 2 is smart. Nick 2 is forever and always a student of the markets. So this is, you know, I think I could probably get back there on the 5 second just to show you guys what I was thinking last night. Yes, I can. Okay, very cool. So the data drops last night. There was a little bit of hesitancy on my part because one of the numbers did not surprise the bank ranges. We did get a surprise from quarter over quarter. We did not get a surprise. It was right in line on year over year, but it still was outside the forecasted. So I actually had a member, a private member, get in when I was on the live talking, like, oh man, you know, I probably actually should get in here. I don't know. I was waffling a little bit. He got in. Luckily, after price made this big jump to the upside, it gave me a nice little discount pullback. I jumped in and got a nice little 1.8 out of it. Can I explain scalping? Do I see, okay, I'll touch on your question, Sebastian, in just a minute. Do I see USD JPY ringing intervention bells? I'm going to be honest. I do tend to avoid the Japanese yen right now for the last few months because of all the intervention scares. It's scary to me to have any money involved in a currency that has a history of like just randomly intervening in the FX market and absolutely destroying accounts. It's one of those things where if economic data is coming up, let's say economic data is coming up at 8:30 and I'm in a trade. Most of the time I won't be, but let's say I am. I've already accounted for a spike. I have it in my mind because I know it's coming. I know the 8:30 news is about to drop, so I can prepare for it. I can either prepare for it by accounting for it or by getting out of the market and protecting myself against the spike, right? With intervention, especially out of the BOJ, it is completely random. And so I tend to avoid the Japanese yen pairs for that reason. Now I am looking at UJ on a macro scale. If this can happen, you know, I've been talking about this trade actually since February, because we had very drastic, we had a very different outlook on interest rates at the beginning of this year. It was looking like a generational trade opportunity was going to happen with the U.S. cutting rates and the yen, Japan raising rates. We were going to get a policy divergence start to occur there, where I would be selling off UJ for days and weeks, depending on how long that currency intervention play would have lasted. Now we haven't gotten that yet, and this may actually be like a 2025, 2026 play for me, where, you know, we don't start to really see any solid yen strength for another year or two and significant dollar weakness for another year or two. It might not happen at all, but that's sort of my outlook for UJ when it comes to, if I'm going to think about UJ at all, it is primarily looking at when is that policy divergence going to come into play, so that I can just sell UJ off for weeks and months at a time. Can I explain scalping? So I will say if you're trading Forex, it can be difficult to scalp because of the cost of a trade. So let's say you want to get in on a one lot trade, on a one lot scalp. Terrible drawing here on TradingView. It can be difficult because, I mean, you may, let's just pretend that one lot is, over the course of 1 pip for any currency pair, I think it's $10 a pip, if I remember correctly. I've transitioned to trading futures, so I don't, if I misspeak, please forgive me. But, and you have let's say you have a 3 pip spread as news drops, you're already down, a significant amount that you have to make back up in the trade in a scalp. So the best way that I can explain scalping is to first tell you should explore it within the futures realm, because these spreads are nearly non-existent and commissions are so low that you really aren't going to be feeling them when you're in the trades. So scalping is simply getting in and out of trades, and under a day is like the technical thing. Like anything less than getting in towards the morning and then getting out towards the afternoon could be considered a scalp. So if you're getting in on the 5-minute, you're getting in on this leg at 8:55 in the morning and you're getting out by 10 a.m. an hour later, you've scalped the market. For me, I'm scalping the market sometimes for that long, but oftentimes it is for a few minutes at a time. For instance, this morning with the Swiss franc, when we had this headline hit the market, if it'll pull up. So S&B cut rates, and then this was one of the first headlines that we saw was they're prepared to intervene in currency markets if needed. That, along with the rate cut, gave us an indication that there was some weakness to be exploited in the Swiss franc. So after this little pullback, now granted, I scalp on the 5 and 15 second. So after we had this little pullback here, I wanted to see it come back into this area. It didn't. It popped up into here, failed, broke down heavy through this little bit of support here, and I got in. This isn't accurate as to where I got in. I got in right about here. Stops were mental above this area here, and got out. I ended up getting out over here. I could have got out over here and been in for literally about a minute and a half, and I should have. But it is what it is. I ended up holding all the way through this and then got out over here about, I don't know, 7 or 8 minutes later. So that's how I tend to scalp. I let the data drop. Now, this morning is an interesting case because it was a policy rate decision. Now, oftentimes, what I'll do is, like last night for GDP, for instance, for the New Zealand dollar, I mean, the ideal entry was within 10 seconds. So the data drops here, 5, 10, we're getting in somewhere on this leg as the market is agreeing with the data. Cool, we get in, we ride this up. That would have been my ideal entry. Get in somewhere on this leg. We'll call it a little bit over half this leg. I'm not going to I don't want to hold much of a stop loss on this, because if within 5 to 10 seconds, the market starts to retrace the catalyst candle, it's not a good sign that the market is in agreement with the data. So I like to get in, and I mean, we tend to go for 1-to-1s to 1-to-2s, and I mean, I'm out within another 10 to 15 seconds. So this is how I tend to scalp the data as it drops. And usually I'll take some off the top. That's what I did once I got in. I got in late. So when I got in over here, I set my stops below this leg here. And then I took some off the top about here. And then I've closed out the rest of my position a couple ticks higher. Good job. Yeah, I had about a $900 day with S&B. A $975 trade with S&B and then I took a loss on the unemployment data of $300. So, you know, overall about a $600 day for me. No BOE trades to add to it, but all right, guys, I think I'm coming to the end of my stream for the day. I've actually gone quite a while, a little bit longer than I anticipated going. I will be back on the stream next week, I'm pretty sure. So if you guys have any questions, I use short-term time frame. Okay. If you guys have any questions, feel free to hit me up on Instagram or YouTube. You can drop a comment on YouTube. Hit me up. I'm on everything. Instagram, Twitter, official Nick Phillips. All right, guys. Y'all have a great day, and I will see you next time.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.